It's actually a hard act to follow. You have Raj Menon on the screen, Dimitri here from Greece, and my dear friend Mandeep Lamba doing that lovely show. And that's what happens after a super hit movie finishes and the next, with less budget, lesser people, they come on the stage. So we need to make it work content-wise, okay? We didn't have the personalities, but let's make it work. Ladies and gentlemen, for the first time, I don't have a script. Everybody knows that I've usually have had a script and always share with my panelists. But that was my job at JLL. I used to be very prepared. When I signed up for this show, I didn't know, but I was moving jobs. So then I told Bhuvnesh that I'm gone. What am I going to now ask? I'm not neutral anymore to my peers and all you gentlemen sitting here. So Harmeet, I told him that you should come here and I should go there. We should do that, right? Soon. Okay. So in that sense, then let's make it more like a drawing room conversation. As log aap sab mere ghar aaye hain, or we can have a candid chat, right? Like a Diwali dinner. We can't play cards here, but that's fine. So I thought, and by the way, the setting is like this. It looks like a midnight TV show, right? But okay, we'll try and keep it very casual and candid. Since I do not have the script, I was actually, while coming here, I was thinking when I was growing up, about 10 years ago. Yeah, doesn't tell my age though, but so about 10 years ago, I studied, there was a survey which was conducted by World Health Organization about, and the title of that survey was, it was, please provide your honest opinion. Please provide your honest opinion on the food shortage problem in the rest of the world. I repeat, please provide your honest opinion on the food shortage problem in the rest of the world. And the survey was a super fail. And why was it a failure? Because 10 years ago, India didn't know what honesty is. China didn't know what opinion is. Africa didn't know what food is. Europe didn't know what shortage is. And America didn't know what the rest of the world is. That world order, ladies and gentlemen, has changed and seems like has changed forever or is changing very fast. Now, in this fast changing world order where everyone is impacted, India has certainly gone up a few notches on honesty, I presume so. And we are getting better, and for that, for many reasons, we've also become the pivot to the world on investments, on capital. It's not my direct subject anymore, and Harmeet, I will start with you on capital. Because I know last few years, you and I have been rotating capital, moving capital, particularly in our asset class, and whatever we did is, I genuinely feel was a brilliant task. The amount of money that we brought into this asset class. So Harmeet, if I start with you on the capital side, would you tell us what is the scale of investments into hotels, let's say 2 years ago to last year to what you see this year? Maybe that will set the stone, and we can then move around with capital and investments.
Sure, thanks Jaideep. Good evening to everyone. So the post-COVID scenario when, sort of hotel industry performance improved across the country, so also the transaction volume sort of started keeping pace with that. 2023 calendar year, we had hotel transactions worth almost $337 million, followed by 2024, where we had $340 million worth of transactions. Currently, this year, based on the pace in the first half, as well as certain recent transactions that have taken place, we foresee that we should close 2025 at close to $450 million worth of transactions. Now, these are hotels, operating hotels, brownfield hotels, land for hotels which have been traded. If we account for sort of institutional capital flows that are coming in, for example, GIC's investment that has come in just now earlier this year in Sammy Hotels, followed by Marriott investing in Concept Hospitality, similar transactions that will gather pace, as Manoj was also alluding in the earlier session. We foresee that by 2030, India, counting institutional capital flows, should be $1 billion transaction volume market annually. And this is very healthy, and this is across actually multiple number of hotels being traded. It's no longer sort of an emotional asset now. People are trading hotels. You know, earlier people were very emotionally attached. I've built this hotel, I will not trade it. But of course, you know, you churn capital, and it's an institutional mindset that has pervaded all throughout, which is why transaction volumes will continue at a healthy pace.
Thanks, Harmeet. What does it mean to greenfield development? Because what you said is assets changing hands, right? What happens to the greenfield development? Maybe there I can bring in Hilton and Radisson as well, because you guys have been really leading the charts in those tier 2 markets, tier 3 markets, also in suburban tier 1 markets. So how's the scale on greenfield developments in terms of where do you see that money flowing in? If I may come to you, Jacob, first. Is it, what do you see as a trend? Is it more those top 7 or 10 Indian cities in the suburban locations, mixed users, or this is more getting into those mid-scale or economy segment in the tier 3 or tier 2 towns?
Yes, so thanks, Jaideep. Congratulations on your new role and welcome to the other side.
Thank you. We're all IPL players, aren't we?
Sorry?
We're all IPL players, aren't we?
We are. Anyways, I mean, so to answer your question, right, Jaideep, the answer is that you have investments coming across the board, right? So it's not limited to, you know, tier 1, tier 2, tier 3. You're seeing investments coming across the board, across cities. So while the top 7 or top 8 cities of India continue to attract a greater share of the investments, we're increasingly seeing a lot of new build opportunities happening in the smaller cities. So be they tier 2 or tier 3, we're seeing a lot of opportunities, and we're seeing inventories maybe doubling or tripling in these cities in the next 3 to 5 years. So there is, you know, interest across the board. There is interest across the board when you're talking about segments. You know, for example, you know, early this year and last year, we got into these SLAs for our Hampton and Spark brand. The reason for doing that is because there is this huge opportunity for these brands in the economy, mid-scale space, in tier 3, tier 4 locations as well. So while we continue to, you know, grow with our major brands in the major cities, there is opportunity across all these cities. And it's, you know, we've now grown to become what, the 4th largest economy in the world. But if you look at it from a per capita income, our per capita income is still fairly low compared to the rest of the world, right? We're 120th in terms of per capita income. Now think about it, when that per capita income doubles, the requirement for hotel rooms is not going to double, it's going to maybe triple or go 4 times, because the affordability factor and the number of people who are coming in the affordable bracket is just going to increase at a much rapid pace. So I think there is huge opportunity, and what we are seeing is just the start of this long development cycle because we are so underbuilt as a country.
Great point there, Jacob. Davashish, because what Jacob just mentioned, if I take a cue from there, he said that the demographics are also changing and very fast, right? And not only the numbers, but also how people use hotels. So how is Radisson getting itself prepared? Because you've really, you had the first wave when you took Radisson to each and every corner of the country, and I remember every 4 hours you would have a hotel in one town or the other. How are you now gearing up for the next leap? Do you have more brands suited for such a change?
One fact that I'm not able to hear him properly, so I'm just grasping on the keywords. There's some problem. I'm able to hear people speaking on this side, but not you for some reason. To answer your question, I think I got your question reasonably fine. See, Jaideep, I agree with Jacob here when he says that the strategy has to be for all the markets. However, I must tell you something which is kind of funny. I joined the industry and development vertical in 2008, and the first HICSA I attended, there were two things which were being talked about. One was India mid-market story, and the other one was tier 2 and tier 3 story. And that has continued over the last 17 years, incessantly so. What I have observed is that it is changing because we have been talking about it. So what has happened is there have been certain companies such as Radisson Hotel Group which have actually gained on the fact that we were the first movers to tier 2 and tier 3 towns. And what we did was that we entered those markets, we shaped those markets up, we matured those markets, and then others also joined the game. However, that continues to be so for us. Tier 2 and tier 3 towns remain relevant for us. 55% of our portfolio is in tier 2, 3 towns. And what we sign every year, a substantial part of it happens to be right there. As a matter of fact, we have launched a brand which is even favorable for a market like Bilaspur, which probably is a tier 4 town, which is Park and Suites by Radisson. So the focus remains on all markets. Tier 1 on one side are much more yielding vis-a-vis the efforts that it takes. However, tier 2 and tier 3 towns are where the volume is. And my observation lately is that these markets are opening up in a very big way. To give you an example, a lot of our tier 3 town owners are expanding the inventory substantially, almost 70% of the inventory of their existing assets. And then they are doing their second or third hotel in the same town. That's one side of the spectrum, and the other side is, till 5 years back, nobody would have heard of a city like Devghar. And as we talk, we are building a 160 rooms Radisson in Devghar and 115 rooms Radisson Blue, which is an upper upscale brand in Devghar. So it's spread out across the country, and you cannot discount any destination's role in this context. I mean, your company has launched Gartner to cater to those destinations. So it's fairly distributed in that sense.
Yeah, thank you for bringing that name. That matters. Samir, you and I have got new jobs. How does it feel? I'll tell you mine later.
Oh, it's going good. I think it's a fantastic place to be in. Probably quite different to what I'd been doing over the last 3 decades. So seemed to be a very exciting role, which is why I sort of decided to take the plunge. Yeah.
Right. And from fortune to luxury and bespoke and very different business model. How you sort of, it's a great challenge to take. But in your view, what are those top 2 or 3 things that you need to do, or what your priorities are in Tamara?
Of course, Tamara, which is our parent brand, is into bespoke luxury leisure. But along the journey, we also created 2 other brands over the last 5 years, which is O by Tamara, which is a good upscale brand, has got 2 great properties already in Trivandrum and Coimbatore, 145 rooms each. We also have a mid-scale brand called Lilac, primarily started off as a pilgrimage location brand, but we have sort of decided that it's a mid-scale brand, can go across all markets. We have 4 properties on that brand. So it's a great mix of brands. Tamara, of course, our parent brand, has 3 very diverse and unique properties. Coorg is a 185-acre coffee estate with 50 luxury cottages. Kodai is a heritage-oriented 50 all-suite property. And in Alleppey, we run a Ayurveda hospital resort. So where all 3 of them are very different, in fact. And we're looking at a few more projects. So from an investment side, we are aiming to double the number of properties over the next 5 years, from 9 to definitely 18, potentially aiming for 20. We already have 9 projects at various stages, from paper to not pre-opening, but closing construction. So in fact, the first property we should open next year is a very exciting houseboat resort. So we're doing 24 houseboats as a luxury resort in Alleppey. Of course, we have to do some land-based development as well. But that will be very unique because it's given the focus we have as a company on sustainability and ESG in general, we decided, and that's why it took us a little more time to finalize the concepts. We are actually going to EV-powered boats, no discharge, absolutely, high on environment and sustainability. So that's going to be our first one. We are, of course, also going out of our traditional approach of having only focused on South India to look at more of a pan-India presence. So we have just started tendering for construction of a 120-room upscale hotel in Bodh Gaya. We're just finalizing land in Kaziranga to do a 50-room Tamara resort. We're, of course, looking at other properties as well.
And would these be on your own balance sheet?
I'm sorry? Yes, yes. So at this stage, we are primarily funded by 2 family offices, right? So that's what we're looking at, yes.
Right, great. That brings to a close for my first segment now. I'll get on to the second segment, which in my mind, I thought I'll talk about infrastructure. I feel bad is good because India is genuinely lagging behind on infrastructure, and probably that's helping our asset class, is it? Really? Because when you can't travel from point A to point B without spending 2 hours on the road in each city and traveling a little distance, but spending a lot of time, you might as well say, hey, listen, let me not go from point A to point B, let me rather stay a night at point A and start early morning. So therefore, you're adding a room night to point A, and then similarly to point B. So is this poor infrastructure that we keep talking about and keep we talk about a lot on this matter, is it really good for our business? What's your opinion, Jacob, if I may start with you? Oh, Samir, you want to go first?
Yeah, I can go, yeah. Okay. So I think poor infrastructure is not good for our business. In fact, we have already had enough experiences of how over the last few years we can see infrastructure development really helping us as an industry. And I think in multiple conferences, different forums, we've all spoken about what government should do for tourism, and typically we've always said we don't get much from governments. But the one thing we have definitely got over the last few years is improvements in infrastructure, which has actually helped us increase demand. If I just sort of share 2 case in points to sort of defend that. In my previous company, we used to have this challenge of not being able to fill up a hotel in Mysore. And because we would see that the business in that property or that location on weekends was very high, but not on weekdays. From the time the new highway came up, that hotel has been doing upwards of 85% occupancy. And that market has been doing upwards of 80% occupancy. So that's one example. I'll just keep sticking to the same region because I have a flagship property there. So Coorg, it used to take 7.5 hours to get from Bangalore. Today it takes 4.5, and it's such a brilliant drive. We are definitely seeing that coming as top of mind recall because it's an easier drive than before. So to add to that, the opening of Kannur Airport has made it a 2.5-hour drive from Kannur Airport. So there's an option of getting to an airport closer as well. Just makes it much more easier for people to travel to.
But to take those 5 hours or 4.5 hours, you'll have to get out of Bangalore somehow. Do you manage to get out of Bangalore?
Absolutely. I'm staying on the central side of Bangalore, so it takes me 45 minutes to get out of Bangalore. Yeah.
All right. Jacob?
No, I'll just add to what Samir said, right? So poor infrastructure can never be a competitive advantage. So while it might help in the short term, it might help a few hotels in the short term, but just look at what good infrastructure can bring, right? Over the last 5-7 years, I think we've done a brilliant job when it comes to these expressways, new airports, right? And a lot of larger scale infrastructure, and look at what it has added to the demand factors. Like Samir was saying, I mean, people traveling from Bangalore to Coorg, right? You have people traveling from Pune to Khandala, you have people along the East Coast. I mean, it's opened up a lot more markets for us, and that has helped grow those markets. It's similar to the airports, right? I mean, look at what good airports have done. I mean, look at what look at the number of people flying today because we've managed to expand our capacity. So I think adding good infrastructure will only add to demand. And we are doing good infrastructure at the largest scale. I think it's that last mile connectivity which needs to be improved on. And I think if we can get that last mile connectivity or intra-city infrastructure, if we can get that, or intercity infrastructure, if we can get that right, I think, we will only see an explosion of demand. We are not going to lose demand because of it. So I think, better infrastructure will lead to only greater demand.
Glad you spoke about airport infrastructure because that was my next point on the agenda. And Harmeet, JLL has done brilliant work around airport infrastructure. What we see in AeroCity was all classic work that JLL did 1.0 and then obviously 2.0, and I understand that all of yours continue to work. And I see many other airports are just replicating that model. It's easier to see what happened here, and it's very successful, and everybody's really made money, even on those leasehold land parcels. But you think all of this will work in, let's say, in tier 1 airports or tier 2 airports as well, or call it emerging locations such as Lucknow, Ahmedabad, Vishakhapatnam, and many more? Will it continue to work?
Yeah, sure. I mean, actually, what airport becomes like transit points, hubs, when you enter a city. And then, given the success of Delhi AeroCity also, that's a model that's going to be replicated across all these cities, where it's going to be sort of integrated. You're going to have office, retail, hospitality, of course, as an element. And all these will sort of be symbiotic in the growth of not only that airport, surrounding area and that city. So definitely, for sure, that's going to happen. Not only that, with the new airports also, of course, the number of aircrafts that are being ordered, we have almost got about 1,000, 1,500 aircrafts being ordered between Air India and Indigo. And I think they're going to sort of add almost, 100 aircrafts every year, the deliveries, 100 to 200. So that's only just going to sort of spur the growth in travel and consequently demand for more hotels and other ancillary facilities.
Like we know how many planes are up in the air and how many more ordered, do we also know how many hotels around these airports are operational and how many more are under pipeline, just to sort of understand the scale? Any one of you?
I'll take that one probably. Jaideep, we've been talking about new airports, and every time a new airport is announced, we definitely get a lot of queries for new hotels. And these hotels take their own due course to get built. So my response to that is, yes, new airports, new gateway destinations, and new hotels, and a reasonable number as well. It's not like you announce one airport and it's just one hotel that comes up. You actually get multiple queries along with one. That is indicative of how an airport helps in reaching out to not only that one destination, but also all the destinations which are connected with that one. I hope I got your question correct.
Yeah, I know. I just wanted to know maybe.
No, so I don't have a number for you, but I'm just saying, I'm just adding to what he was saying. The airport needs to be seen as an enabler, right? The airport coming in, like he was speaking some time back about this place called Deoghar and, hotel supply coming in. I mean, why is hotel supply coming in over there, right? So similarly, when airports come in, airports are an enabler, it helps commercial offices move there, it's helping, other asset classes move there, and then, and once these have moved in there, of course you can support a hotel. Now, just going with a hotel and nothing else is not going to help, but then, the airport comes in as an enabler, and then that adds to infrastructure, which ultimately supports hotels.
On mixed-use development, I can tell you in the IHG scheme of things, I've seen that Holiday Inns and Holiday Inn Expresses have really given a fantastic yield to the owners, which is at times equivalent to or even better, depending on what cycle you are and what is the horizon that you see. Those yields are at times better than commercial office rental yields. Right? And is also a nice blend above retail. And it kind of gives you the return that neither retail nor office property gives you. Yes, it's a little bit more capital intensive project, so therefore you as a developer need to put in more money. Now, do you think this is the model going forward? Will the yields remain where they are, or are they going to come down? And how, in your mind, the real estate developers whom you keep talking to are thinking on this asset class?
If I could take that one. Yes, mixed use probably is the future, and not just in mid-scale, but also probably higher up the brand spectrum. And why only simple mixed use wherein you have commercial combined with a hotel or retail and commercial combined with a hotel, and you can do all the permutations and combinations. But also alternative growth models such as sale and lease back or a hotel combined with a branded residence. See, at the end of it, it's about making cash flow sense for the investor. And as we go into the future, what I have experienced is that mixed-use projects are actually much more in number as compared to the past. So what has happened, Jaideep, is on one side, traditionally, hotels used to be those assets which used to be built for pride, vanity. But now, with the new generation coming in, more educated investors coming in, funding getting institutionalized, what we have experienced is that every penny has become ROI focused. And that is where not only a hotel combined with a retail mall or a commercial building, but also creative instruments of building hotels are coming in play, and more so.
Staying on mixed use and airports, Jacob, congratulations on the Waldorf and the Hilton combination that you've done at AeroCity Delhi. So do you think more of that we're going to see? Getting in a Waldorf in an AeroCity?
So I mean, for the right opportunity, AeroCity is unique in a lot of ways. Now, if we come across similar opportunities across the country, which, where you can plant the Waldorf Astoria flag, because keep in mind, Waldorf Astoria is the most exclusive brand that you can, within our portfolio, it is our most exclusive brand. So, the right fit, the right location with the right ownership group. It needs to, tick all the boxes, right? AeroCity was perfect for us. And just going back to your earlier question on mixed use as well, right? I mean, we love mixed use developments because I think given the price of real estate and the way, land prices, etc., gone are the days of just doing single asset, hotels as single assets. I think it's the best thing to do nowadays is to combine it with other asset classes, be it office, be it retail, etc. And together, I mean, they're symbiotic, right? The hotel supports offices, offices supports the hotel, right? I mean, you balance out your yields. And I think, those developments work far better than standalone hotel developments.
Going back to my original point, poor is good. So let's say if you're unable to travel from AeroCity to Gurgaon and Gurgaon back to AeroCity, chances are you may put another Waldorf Astoria in Gurgaon, isn't it? Easier. And more opportunity, so it's poor is good, isn't it? Do you want to change your mind?
So which is why what Jacob mentioned earlier was that the intra-city infrastructure needs to improve. So this is part of that. But getting to Delhi is the other part what Jacob mentioned. So.
You can look at it the other way, right? I mean, people would prefer to stay in AeroCity and not travel all the way to Gurgaon, right?
All right, great. I just wanted you to change your mind, but you didn't. Okay.
No, but Jaideep, just to add to the point that what you were saying earlier in terms of mixed-use developments, they also come about because generally you need to defray the costs across the asset classes so that the hotel, because it's a longer term and a longer gestation project, needs to have a sort of a lower land cost. Here, one of the points which will have an impact and a bearing on enhancing the FDI inflows is government needs to bring land as an enabler to enhance the tourism infrastructure. While we see that the government owns land parcels and they auction it, of course they also have a process whereby they have to get the best price out of it. But there they should just keep the reserve prices sort of in a way little softer and have a long-term sort of lease revenue built around it, rather than take upfront lease rental premiums, which increases your project cost. So that was also one of the policy recommendations that we would like to sort of recommend to enhance the FDI inflow.
Sure. Samir, you're in the business of creating destinations. So you, it doesn't really matter whether you will have the next luxury hotel at the airport for you, right, or somewhere else. But how do you decide that this is the next destination that we can build on? And by the way, because you're in many ways the first timers, and first timers not necessarily make money every time, but they also sort of create a path for others. So what in your mind are the new destinations where you think Tamara can have a story to tell?
So, like I mentioned earlier, the next big project we are doing is the houseboat resort in Alleppey. So, while the destination is an existing one, it's known, but what we are doing is very unique. And we'll actually, when we were trying to look at how do we do, and just a few weeks back I had a positioning workshop with the team, and we realized that there is no comparable product and resort offering anywhere around the world. So there are a few which sort of get close to it, but not what we're trying to do. So that's going to take a lot of effort, and I'm sure it's going to be very exciting. The next one we are looking at is Hosur. So we already own a fairly large farm there, 50 acres. So we are conceptualizing a farm resort in Hosur. Of course, to answer your question of how do we look at it, part of it is because by virtue of having a fair amount of land bank within the family office investment funds, we try to see if we can utilize some of them, right? So we also own a few other coffee estates which we keep evaluating when we should look at it. That's one part. The second is we're constantly looking at what else can we do, which is probably allowing us to continue with Tamara being unique as a resort brand. So for example, one gap we see in our portfolio as we grow with Kaziranga, with the wildlife and farm resort and houseboat, will potentially be a beach destination. But Goa is not our first choice because it is done to death. So we are trying to understand what could be potentially other beach destinations where we could get to and create the demand over a period of time.
Okay, I come to the last segment, which is just sort of forecasting. Harmeet, what do you think, how long the story of growth will last?
Well, I think growth is definitely there. I mean, we're a growing economy. We're kind of under-penetrated also. I was doing a recent study where we saw that number of rooms per 1,000 population in India was only 0.1. China was already at kind of 3.4. And of course, going to countries with slightly smaller population, that gets skewed. But just taking a parallel with just China, we're still, way below because we are in decimals. Others are all at least in single digits. So, branded room supply, we're still sort of short. We're 10,000 hotel rooms, branded hotel rooms, adding 10,000 rooms every year, which again, then as the base increases, as a percentage increase, it's very nominal increase. So, given the fact that infrastructure we've spoken about, airports, the number of aircrafts that's going to come in, our office supply, manufacturing, all this will continue to sort of enhance. And even Sanjay was mentioning earlier that, in India, you foresee demand exceeding the supply just because supply takes a lot of time, lag to come onto the market. So I foresee great times ahead for some time.
Jacob?
No, I agree with what Harmeet said, right? I mean, as statistics go, 200,000 rooms in India, you've got 4 million rooms in the US, right? We've got a population of 1.4 billion, that's 350 million. So yeah, you're going to continuously see growth happening. Will there be cycles in between? Yes, there will be cycles, just like any other asset class. But long term, there is huge potential, and I think, are at the start of this huge build journey as far as hotel rooms go.
Davashish?
Well, no one has a crystal ball to forecast how long will it sustain. But if you look at the numbers, Marriott has recently announced 500 hotels by 2030. Radisson Hotel Group has announced 500 hotels by 2030. Another hotel company says we have signed up with one strategic partner for 75 hotels, another strategic partner for 150 hotels. And the list goes on and on. Everyone is talking about an exponential growth. If you think of it, some of these companies don't even have 100 hotels as of now and haven't been able to have 100 hotels over last couple of decades. But in the next 5 years, they talk about an exponential growth, and rightfully so. Because if you look at fundamentals, 65% of the population of the country consists of millennials. Millennials like me who don't want to accept that they are getting older. And Gen Z. This population, if you think of it, they are going to consume products for 40 years. Products which are going to be built now will be consumed by them for next 40 years. and why only the demographics? You can also talk about improving infrastructure. Where are we as compared to where we were in terms of government's initiatives? Government has become so proactive. If you think of it, I was at a FHRI conference last weekend, and I attended a presentation by Mrs. Vidya Vati, who is Secretary of Ministry of Tourism. And what she talks about was phenomenal, Jaideep. A very structured approach to overall development, wherein she talks about not just Ministry of Tourism focusing on the tourism, but also every ministry coming together, all the states coming together with central government. And all these factors, wherein on one side we talk about 50 new destinations, which are going to be global destinations. Government talks about one global destination per state. And government proactively making efforts towards easing out approval process, easing out the regulatory framework, the licensing structure, and making it homogeneous across the country. It's going to take time, but the fact that we are working towards these things, we are probably inching towards a fact which shall, we are inching towards a market which shall be robust in the years to come. And that's why probably all the global companies are focusing on India as a strategic destination. Radisson Hotel Group for sure is focusing on India as one very strategic market.
Davashish, you mentioned Gen Z. You know, the words that I hear when I go back home are, oh, you are cooked. There is no Riz. You know, he's being shipped with her, or she's being shipped with him. Listen, I mean, are we prepared with whatever we are doing to cater to that audience? Are we getting in that lifestyle? Are we getting in those business models in F&B, in stay? Are we futuristic or future-proof enough in that sense? What do you think?
Jaideep, the funny part is today we talk of Gen Zs the way millennials were being talked about 20 years back. So that's a very natural progression. Every next generation is talked about in a funny way by the previous generations. And what happens is technological advancement, lifestyle changes are organically inculcated by the business owners, business models, and companies like Radisson, Marriott, Hilton. So it's a very organic process through which you absorb the tastes and preferences, evolving tastes and preferences of the next generation. That's the cycle we live in. It's very natural.
You know, I'm reminded of my days in 2010, maybe 9 or 10. Mr. Oberoi called me once to his office and asked me, because in those years, you know, every Sunday, the Economic Times would carry so-and-so real estate group will build the next 50 hotels in the country. And almost every real estate company wanted to build the next 50 hotels in the country. Mr. Oberoi calls me to his office and says, if all of them will build the next 50 hotels in this country, what are we going to do? So, and then obviously, we all know what happened. A lot of that supply was either deferred or didn't come at all. What do you think is the situation today? What is the conversion versus announcements? Ballpark estimate, whatever you guys guess, each one of you.
Of 100 deals that we sign, okay, I'll tell you a figure, a comparable figure, okay? Till 2022, of whatever we used to sign, we used to have a washout of 15 to 18%. 15 to 18? Yes. Washout means hotels that never got built. And whatever we have signed afterwards, the washout ratio is about 10%. 10%.
Up 10%.
Yes.
Good, so it's come down. That means the sources of capital are more, that means people are more disciplined, that means banks are perhaps providing the right loans, you know, maybe other reasons. Jacob?
So, you know, we've been extremely disciplined about what we sign because, you know, it's not a signing machine. We want the hotels that we sign to open. So we go through strict and very strict due diligence process to ensure that we are weeding out what's not going to get built right at the beginning. Right? I can tell you that, Davashish spoke about the washout ratio. We don't have such a term. But, for us, from whatever we have signed, say between 2017 to today, we've had one hotel which has fallen out of the system. Right? And even today, we measure our construction start ratios to signings on a quarterly ratio that's reported, on a quarterly basis that's reported actively. And our construction start ratio is roughly 85% of what we sign. So, most of the deals, by the time we are signing it, these are hotels already under construction, and that's something that we're very proud about.
Samir, this actually takes you back to your older life. What was your data at that time, and what do you think now?
I think, especially in my previous one, again, we had a much higher level of diligence, so pretty much what we were signing, we knew would open. I would think of the, say, 50 deals, if I go back and say, there'd be 3 or 4 which probably wouldn't open for various reasons, but largely they've all opened. Having said that, I think it also depends on the approach the company takes, because there are certain companies who are more rigorous when it comes to signing versus certain companies who say, let's sign as many as we can and we'll open whatever opens.
You want to add, Harmeet, because you know where the capital's coming from?
No, but it's right. I mean, it differs because like Jacob and all, they also mentioned that each company has its own sort of rigorous procedures. But based on our intelligence, when you were also on this side, I think that washout or burnout is a higher multiple percentage, what we've noticed in terms of signings. But having said that, I think this cycle, like you rightly said, people are more well capitalized and more prudent about the hospitality business. So we will see a sort of lesser more hotels develop as a percentage of the signings.
Jaideep, if I could add, you want to really understand the washout ratio, you just pick up hotels' trends and opportunities reports by Hotelivate, which was done probably 10 years back, and see how much has actually been actualized in terms of hotels openings. That's the answer to your question.
So a few learnings out of this session, ladies and gentlemen, for all of you, for me for sure. It is an under-penetrated market still. The growth from here on is perhaps a little bit more careful and conscious, is what Jacob mentioned. Harmeet said that the capital is more prudent, and so are the sources of capital, so probably the conversion rates will be better. Are we prepared for the changing demographics? Are we addressing the Gen Z so that whatever hotels today you're building, tomorrow our folks are able to manage them and manage those expectations and the yields better? It's something that I think all of you will listen more tomorrow when we get into the ops side and the human resources side. I didn't want to touch that subject at all because I know there are very well equipped people who will talk about that aspect of hospitality as, gentlemen, all of you continue to build the India hotel story. Thank you very much for your attention. I know, Mandeep, you were out at the moment when I said it was a very hard act to follow to what you guys did. But listen, with whatever we had, we tried to make sense of it. I hope you liked it. Thank you very much, ladies and gentlemen.